Hi, everybody. This is Pasha Kane. I'm so excited to be kicking off a new series that I am excited to highlight experts in real estate, people that have really impressed me, but more importantly, that can bring value to my listeners and my viewers and my clients. People are really changing the industry in my mind and making an impact. And definitely one of those people that I was really impressed with and just became quick and fast friends with is Evan Swanson from Guild Mortgage. Evan is just a bright mind, a astute leader in the community, but also astute financial advisor to his clients in the lending world, but outside of that. So I would love to introduce Evan, and maybe Evan, you can introduce yourself and tell us a little bit about your background.
We'll do it. Thank you for that very kind invitation, Pasha. And I'm equally as an admirer of you as well. I know we had a chance to sit down and have a conversation about a month or so ago, and we had a great talk. And I think we were both kind of getting excited for each other because of our missions in life. So, anyways, it's an honor to be here. Thank you for having me, and excited for our conversation here.
Excellent. So, how did you get into the mortgage world? Tell us a little bit about kind of what intrigued you and what excited you. And I think you're like me, there has to be a passion for you to really kind of follow into, something that you give back to your clients and to people.
Yeah, absolutely. So, my background, I actually grew up in Portland, Southeast Portland, and I grew up in a real estate family. So, my mother was a licensed realtor, my aunt was a licensed realtor, my cousin, who's like my older brother, is a licensed realtor. And so, inevitably, all our family gatherings, be it, holidays or birthdays or whatever, would turn into a conversation around real estate. And of course, when you're a kid or even a teenager, you're kind of rolling your eyes, going, okay, here we go again. But I can remember growing up, Sunday mornings coming down for breakfast, and my mom would have the paper out with all the sales, right? All the homes that were open that day and the prices. And I'd kind of sit there and have my cereal and watch her do that. So I grew up with real estate around me and in my blood. When I went to college, I studied economics and finance. And honestly, I thought I might get into wealth management, but when I got out of college and started to sort of talk to people about what I should be doing with my life, I talked to a couple of mortgage professionals at that time that really seemed to have the impact and the opportunities to lead a great life. And so I said, I'm going to give this a shot. And so that was back in 2002 when I got into the mortgage business and started doing my thing.
Oh, excellent. Yeah, one of the things that really you impress upon me is just like how you look at things holistically. And that really is accredited to this certified financial planner um, certification that you have. And from what I understand, you are the only lender really that has that in the Oregon market. Um, can you speak to a little bit how you're bringing that as a value add, and how does that impact your role in connecting and advising your clients?
Yeah, I'd love to. And if it's okay with you, I'm going to tell you kind of the background of how I got my CFP
Yes.
designation because it happened midway in my mortgage career. So I mentioned earlier I got in the mortgage business in 2002. And you can imagine that from 2002 to 2007, that's a fairly unique time to have your first 5 years in the mortgage business, right? I saw the run up, and I had never seen a housing market or cycle before, so it was very difficult for me to really understand what was going on in terms of the market heating up, and then of course inevitably crashing. And so in 2008 and 9, I sat there and saw all the homeowners who had entered into foreclosure, all the mortgage companies that had gone out of business, the people that were without work, not only in the mortgage industry but real estate and construction and all these things. I mean, it was devastating on a variety of levels. And at that particular point in time, there was a lot of finger pointing going back and forth as to who was the root cause of this housing crash. And there were people pointing at the mortgage industry, certainly saying, well, how did all these products? There was fingers pointed at realtors. How did you let people buy these homes? How did you let these prices go up so high? Certainly regulators, the fact that we don't have a real robust curriculum in our public schools for personal finance. And I remember having a conversation with my grandmother, who was alive at the time. And of course, she's part of the greatest generation, right? She grew up in the Midwest, was affected by the Dust Bowl, which brought her out here and involved in her church and, always helping a neighbor and this sort of, ethos. And I was explaining to my grandma, like, these various things. And she stopped me and she goes, Evan, she's like, I hear you. And it sounds really frustrating. My question for you is, what are you doing to help the situation? And I had to look at myself and say, well, I can sit here and complain, but what am I really doing to bring a level of financial competency and prudence to households that I engage with? And I couldn't honestly answer that other than, I think doing the right thing most of the time. I wasn't really doing a whole lot more than that. And so it was that particular time that I figured, you know what, if I'm going to do my job in getting people to borrow hundreds of thousands of dollars to buy a home, it's really incumbent upon me to make sure that I'm dotting I's and crossing T's and looking at their financial picture. And so in 2009, I enrolled at the University of Portland Pamplin School of Business, and I entered into a cohort to get my certified financial planning designation. So yes, as far as I know, and that could be new now, but I'm the only CFP designated mortgage professional in the state of Oregon. And it's my passion and purpose to make sure that when I'm advising customers that, in addition to passing along competitive rates and fees and education, all the things that most mortgage professionals do, that we're also keeping an eye on the bigger picture. And so how do I do that? Well, I mean, as a part of the normal loan application process, we are already collecting and more or less taking a survey of a household's financial situation. I know their age, I know their income, I know their assets, I know their debts, I know their credit scores, and oftentimes, of course, know kind of their goals and aspirations financially. And so, with that, I'm able, if I see glaring holes or issues, I can bring it up and say, hey, I know you came to me and you wanted to buy this home and put 20% down, but I'm noticing over here you have this gap in your situation. And what if we kind of looked at this differently and approached it in this manner? I've also developed a curriculum or sort of what I call a DIY financial planning light. I call it my four pillars of financial well-being. And it's basically a way for me to advise households to say, hey, if you've got extra money, either on a monthly basis or maybe you're receiving a lump sum for some reason, these are the ways I prioritize a household's financial goals to make sure that you're using that money wisely. Because let's face it, I mean, unfortunately, we just don't really have a real robust financial understanding amongst the general population. And so I think that those of us who have studied, those of us who have done the work, really have a responsibility to do that and help others and hopefully avoid another 2009 situation down the road. So long answer to a short question, but there you go.
Well, that's what I love about you. You just provide such like amazing nuggets, that we don't think of. So it just also really differentiates you from, a lot of lenders that are in the market. So one of the things that you touched on that really, for me, I picked up on right away is just your connection with people. And when you're asking, for financial information, it can probably make people feel pretty prickly, right? So can you talk about like how do you kind of get people to get their guard down and really see that as you're there to support them, to be an advisor, but just how do you get that trust built? And then talk about your process like of how you move them through the transaction.
Yeah, great question, Pasha. So, I think generally speaking, most people, when they call a mortgage professional, have a sense that, they're going to have to open up a little bit and be transparent about their financial circumstances. But, yeah, it can be a little bit awkward at times. But, pick up the phone, you've never talked to someone, and 3 or 4 minutes later, you're talking about their credit score or, how much they have in their retirement accounts. And it's definitely an acceleration, right, in terms of getting to know somebody. But for me, everybody has a hope. Everybody has a story. Everybody has a need. Everyone has a fear. And even though our job is highly rational in terms of how we measure and analyze financial circumstances, what I've really learned in my 20 years of doing this is I really want to try and listen and understand what is of utmost concern to this person. And how can I help them solve that moving forward? And sometimes it's just uncertainty, right? Like, hey, I don't really know what the process looks like. Can you walk me through what's going to happen here? Other times, there's significant and real concerns over affordability. And you've talked about this. I think you have a very good understanding when you're working with your clients about how having a home is an emotional connection, right? As much it is as an investment, and there's, aspects to it that are highly rational and tactical. Like at the end of the day, where we live is a very, very emotional thing. And so I've really had to sort of adjust my mindset when I'm engaging customers for the first time. And I really have to be intentional about trying to understand and uncover what those fears or uncertainties are. And the one thing I've learned too is that I can't help everybody.
Yeah, yeah.
For any given reason, I don't have all the answers. I don't have all the tools, and I am me. And sometimes there are people out there that don't engage with me well for any given reason, not out of intent or anything, but just it's just not a bad, it's just not a good fit. And so I will say that the one thing I've learned is that I'm going to go into every engagement, every conversation with genuine curiosity to learn from this individual and really try to uncover how I can help that person, but be okay if I can't. And then respectfully help that person find the right approach to be able to move forward. So again, long answer, short
Oh,
question,
I
but
love it. It just
I
shows
really,
also. Yeah, it just shows your character too, that you really put people first. And, it also just brings to mind that you are an educator and a thought leader. One thing I have observed is that you do give back to the community. You're putting on, programs to educate people. Kind of, what do you see as your role in that space as an educator and a thought leader?
well, I think that it's one thing that I enjoy doing. And I like to teach, I like to educate, and I like to obviously have a positive impact on people. Now, a lot of people think the content I like to teach is quite boring, but there are some people who find value in it. For me, it's about passing it forward. And again, in a previous conversation that we've shared, we've both been exposed to mentors in our life that have helped us along the way, both in our real estate careers and real estate investing. And I feel so much gratitude and gratefulness for the fact that I've had positive influences that have helped shape me and allowed me to become the person that I've become. And I think that since we've been the beneficiaries to that, that it's incumbent upon us to seek out others to help benefit, help them benefit as well. So, I absolutely have a passion for teaching and educating people on the benefits on how to invest in real estate. And frankly, I'm have an even greater passion for helping people learn about that who don't already have people in their family or in their communities that have experience investing in real estate. I mean, when we talk about some of the unfortunate inequalities that exist in wealth in our country and around the world, these are compounding effects of, communities and people who have learned some of these secrets, so to speak, earlier on in life. And I think the more that we can spread that message and let people of all backgrounds and communities understand how to invest in real estate, we know the generational impact that'll have. And so, this is a way that I think we can use our professional expertise to help spread that message, especially to the communities who haven't had access to it before.
Yeah, that is so true. Um, you know, you've leaned into really kind of also educating your clients and just the community about the market. And I know that's top of mind right now for a lot of people, a lot of uncertainty, a lot of, I think, misinformation out there, a lot of sound bites. Um, you have a really strong grasp just because I think of your role, but also because of your personal interests and expertise to really kind of take that and make it very digestible of what's happening in the market. Can you give our listeners and viewers just what is your projection for 2025 and how would you kind of calm the nerves and what would be some of your outlooks for this upcoming 12 to 18 months?
Yeah, absolutely. It's always hard to know, right? But I think that, and by the way, my outlook is shifting in the moment. Um, I think one of the biggest themes right now is interest rates. Okay, so what we've seen is that interest rates. So by the way, we're recording this in the middle of January
Yes,
2025. So
yes.
and a month ago. mortgage rates were about 3/4 of a point less than they are today. And so when I, really began to do my forecasting and planning, which I start back in October and kind of, works through the picture for what mortgage rates would look like is a little bit different than what it looks like now. Now, mortgage rates currently, when we talk about mortgage rates, I typically talk about the averages. So 30-year fixed rate mortgage in the US right now, around 7.2%. These are the highest levels we've seen since the spring of 2024. And it looks like we may be headed back towards the highs that we had in October of 2023. So higher interest rates is not what we need right now for the market. And the reason I say that is because we are in an unprecedented dynamic right now in the housing market, in that 80% of homeowners out there that own a home today, roughly 2/3 of them have a mortgage. 80% of the people with a mortgage have interest rates that are below 5%, and 2/3 have interest rates that are below 4%. And so there's never been a time in real estate history where you've had this huge gap between what existing homeowners have as a fixed rate on their mortgage and what the mortgage rate is. Okay. So right now, if you have, say, a 3% fixed rate mortgage on your house, and you want to make a transition in your housing because you want to be closer to work, you want to be in a different school district, your house is too big or too small, all the reasons why people typically want to move. Well, you have this gigantic hurdle in your way in that you have a existing mortgage at 3%. And if you go sell that home, or even if you keep that home, but you want to go buy another one, now you're staring at money that's 7.25%. Now,
Mhm.
listen, there are tools that lenders and real estate professionals can help consumers, both buyers and sellers, use to help mitigate that. But just again, talking about national averages. And so there's no time in history where we've seen this lockdown take place, where there is a disincentive for a lot of people not to buy and sell their home. All right. Okay, so what does that mean for the housing market? Well, number one, we don't have as many transactions because a lot of people are just saying, "Hey, you know what? It's a long commute, but I'm willing to take that long commute to keep my low mortgage rate and low payment." All
Mhm.
right. So you don't have as much many sellers out there, and of course, higher interest rates impacts affordability. We are at a point right now where our population is primed for home buyers. Our largest age cohort right now is between the ages of 30 and 40 years old. Um, on average, according to the Census Bureau, roughly 40% of all 30-year-olds own their home. And by the time they reach the age of 40, that's 60%. So if we have the largest age cohort between that age group, roughly 50% of those people are going to, well, excuse me, 50% of the people who currently own a home, are going to buy again. So there's a lot of demand. There's a lot of home buyers out there, even though rates are high, but the supply of homes available for sale is relatively low because of the rate lockdown. So long story short, is that as we look ahead in 2025, if interest rates stay elevated, well, then unfortunately, we're probably looking at a year that is pretty similar to 2024, where home sales, the velocity, the number of home sales remains relatively low. Okay. Um, Home price appreciation will still go up, meaning home prices will continue to rise in the face of higher interest rates, primarily because the impact to the supply side of the market is actually bigger than the demand side. Okay, because of age demographics, demand is there regardless of interest rate. But the interest rates have a big impact on the number of sellers that are going to buy and sell. Okay, now these interest rates have been increasing on inflation expectations, and the reality is it's sort of speculative at this point because inflation right now is not rising, right? But there is a belief that some of the economic uh, policies that the new administration is going to bring in could be inflationary. Not that it is, we don't know that, but
Mhm.
it could be. And so what you're seeing right now is the markets are going out and increasing the price of interest rates on the expectation that these policies will be implemented and that those policies will cause higher inflation.
Mhm.
But we're probably weeks or months from that actually happening. So I think that we could be in for a relatively volatile year in terms of interest rates. because it's going to take time for the administration to implement these policies. It's going to take even more time for those policies to have any impact in the economic reading. So, as the market expectations change and interest rates fluctuate or down, expect the real estate market to react as well. So, when rates are coming down, I think you'll see a lot more activity. When rates go up, I think things are going to slow down. So, again, I'm pretty good at providing long answers to short questions.
No, it's fantastic because it isn't a short answer at all. You know, there's a lot of dynamics at play, and we are in January of 2025, so we have a long road ahead of us yet. So, but what I really like is how you just bring just, very candid and real outlook. I think that's what sometimes happens is there's too much sugarcoating that's going on just to get people, you know, excited to get back into the market when, the reality is there's still some cautionary tales ahead of us. Um,
Yeah,
and
yeah.
so on that, what advice would you give people who do need to make a change? They need to buy or sell that they don't feel like they're kind of going to get ambushed, in a
Yeah.
climate that might not be the most conducive for that. But any advice?
Yeah, so let's take it first for buyers, right? If you're a buyer out there, any buyer out there that's waiting for the market to crash or for home prices to quote unquote correct, it's not out there. Okay. In order for prices to decline significantly, right? I'm not talking 1 or 2, 3%, which can happen just with seasonal fluctuations. I'm talking 5, 10, 15, 20% drops to prices. There is still, by the way, this is like one of the most hotly searched items on the internet or YouTube. You can find any commentator out there that's going to give you that message.
Yeah.
But they are very, very short on accurate, rational data to back up that viewpoint. Here's the reality. I already talked about the demographics and the demand. It's there. There is demand, even despite the fact that interest rates are higher. Okay. The only way that home prices would decline significantly is you suddenly had a flood of supply. And where's that supply going to come from? Well, listen, mortgage delinquencies right now are virtually near low level, all-time low levels. There's not a flood of foreclosures coming like we had in 2008, 9, 10. I've heard the theories that, the short-term rental market's going to explode and everyone's going to sell. You've heard about the baby boomers selling all their homes. What are the other ones? Oh, the student loans coming out of forbearance, and then home buyers have to pay the student loans, and then they have to foreclose. There's no actual data to support this. Okay. Supply is going to remain constrained. We're not building homes fast enough to meet our population, and the demand is there. Home prices are likely going to continue to increase. Now, hopefully not at huge numbers. I don't think we're going to see the, greater than 5% year over year appreciation because of interest rates at this point. So if you're a buyer, don't wait around for prices to go down. Um, Align yourself with a mortgage professional, a real estate professional that knows some of the tools that we can use to help mitigate the higher interest rate environment. There's buy downs, there's seller paid closing costs, there's repositioning down payment money to pay off consumer debt to look at aggregate cash flow. There's all these different things we can do to make home buying in a higher interest rate environment less unaffordable. Okay, now if you're a seller and you want to move and you have that 3% mortgage, tough situation, right? You really got to want to move. You really got to have to move to make this happen. Um, but again, I think it's important to understand that if we don't necessarily see home prices falling in the future, we don't necessarily see home prices increase substantially in the future, then that decision becomes a little bit easier in my judgment because the cost of timing is not that significant. So, my advice is follow the ideal process of selling your home with Pasha Kane. There you go.
Amazing. You're amazing, Evan. Well, I think there's been some great insights in this interview. So I really appreciate you taking the time. It's been so enjoyable. And just every time I talk to you, I get so much, I get energized and get excited, even though maybe it's not always news we want to hear. It's reality, but just the more we are informed, the better decisions we can make. So I
Absolutely.
think that's
Yeah.
what you bring to the table. So just one last question, and in the spirit of advice, what advice would you give your younger self?
Oh man, it's a great question. And I think that I think the piece of advice that I would give myself, and I would apply this both professionally and personally, is just trust the activities and don't get hung up in the outcomes. Focus on the things that you know you need to do to live a productive life, that you know you can do to have a positive impact on others. And have faith that as long as you follow that recipe, the outcomes will take care of themselves. And I think, especially in my younger years, I spent too much time, or maybe my ego was too involved in trying to worry about the outcomes of my life, as opposed to just knowing that I'm doing the right thing. And so that's what I would do: is I would tell myself, focus on the activities, and the outcomes will follow.
I love it. Evan, thank you so much. I really appreciate you kicking this off with me. You're just, I mean, you've really raised the bar in terms of over delivering as always. So thank you for your time. And I know everybody's going to get a lot of value out of our conversation.
Thanks for having me, Pasha. Thanks so much. It's been an honor.
Thanks.